The Korean stock market crashed? Is that what I'm seeing all over the news? Today's a wild day in the global stock markets, right? Especially after last Friday here with American stock markets. South Korea just had their Black Monday. The KOSPI, which is their version of the S&P 500, crashed over 8%, and that tripped a circuit breaker. Trading was halted at 20 minutes, okay? Now, I know that sounds crazy, holding it for 20 minutes, right? But for active traders like us, I think this is actually the setup that we've been waiting for. So let's take a look at the big blue card on the left of the slide, okay? That's the headline number. The KOSPI fell 8.29% on Monday, June 8th. That was their worst day in years, and the circuit breaker fired 3 minutes after opening, right? So now if you take a look at the three rows on the right of the slide, the first row shows Samsung and SK Hynix. They both each fell about 10% intraday, right? That means that while stocks were trading during the day. Now, these are the two memory chip kings of the world, right? I mean, essentially, we've got SK Hynix, Samsung, and Micron here in America, of course. So anyways, the second row shows the KOSPI, which is still up 75% year to date, even after this crash. It's still the world's best performing major market in 2026. And then the third shows foreign investors sold $62 billion of Korean stocks this year per Goldman Sachs. But here's the key, okay? Nomura calls this forced selling, not fundamental selling, okay? Big funds had to trim because Samsung and SK Hynix got too big inside their portfolio limits. That's not a broken story. That's not, it's essentially a mechanical squeeze, all right? And mechanical squeezes are exactly what active traders, that's where they find entry points, okay? So let's go ahead and walk through exactly what happened and where the trade is. But before we do that, hey, please give me a thumbs up. Click on that like button. Give me a subscribe. And of course, if you've got any comments, any questions, right, during the video or after the video, drop it into the comments for me. I'll respond back to you all. Okay, let's get going. All right, now let me walk you through exactly what went down. Okay, so if you take a look at the timeline running across the screen, start on the left. Friday, before Seoul even opened, the U.S. tape broke. MICRON, remember I mentioned MICRON earlier? They felt big, especially after the close, okay? 13.25%. NVIDIA fell 6.2%. The Philadelphia Semiconductor Index had its worst day since March of 2020. That was the fuse, at least in my opinion, okay? Next dot, the open. 3 minutes after the bell, the KOSPI was down more than 8% already, all right? The Korea exchange tripped a circuit breaker and trading froze for 20 minutes, as mentioned. Okay, next one. The morning session, okay? Samsung Electronics fell 8.5%. SK Hynix fell 7.29%. Both touched down more than 10% intraday. Remember, these two are basically half the entire KOSPI, okay? Next, we've got the afternoon, okay? The Korean won fell to 1,560 against the dollar. That is a 17-year low, and it forced verbal intervention from Korean officials. And then the last dot, okay? The close. KOSPI ended at 7,484, down 8.29%. Losers were crushed. Now, the volume was massive, $31.2 billion. The blue box at the bottom is the key takeaway, okay? A market that rallies 100% in 5 months builds up huge leverage, all right? What broke Monday was the leverage, not AI memory thesis. And that distinction is the whole trade, okay? This just makes me think of something I seen on social media where Jensen Huang, the godfather of AI, went to Korea, right? To congratulate his partners. How Farah Rubin is going to use tons more memory. How their CPU chip, Vera, is going to use tons more memory chip. Just want to share that with you. All right, now let me break down who actually got hurt on Monday, okay? If you take a look on the left side, that's my damage list right there, okay? That's who got hurt. Samsung Electronics closed at down 8.5%. Intraday was down 11%, okay? Now for SK Hynix, they closed down 7.29%, broke below 2 million won per share. Those two stocks, okay, alone are about 47% of the entire KOSPI index, right? That's massive. I mean, about half practically. So if you think about it, when they sneeze, the whole market catches a cold. LG Electronics, they got hit even harder at minus 12.5%. And then Hyundai Motor fell 9.71%. Okay, that tells you this was not just a chip story, but it was broad-based fear. Okay, the Korean won itself sliding to 1560 against the dollar. I mean, that tells you foreign money was leaving very fast. Now, take a look at the right side of the slide. Okay, under the light blue highlight. This is the real story for any active traders that are watching this, okay? So AI memory chips are fully sold out through 2026, okay? SK Hynix said last fall that its entire chip supply for 2026 was already booked, right? A lot of these memory companies, okay, keep in mind, they're practically sold out, okay? That is locked in revenue, okay? SK Hynix Q1 operating profit was up 405% year over year. Then you look at Samsung Q1, operating profit was up over 8-fold year over year. These aren't broken companies, okay? These are printing machines, at least in my opinion, okay? Goldman Sachs has a 12-month KOSPI target of 12,000, which with about, 35% upside. And even after Monday's crash, Samsung is still up 138% year to date, and SK Hynix is up 196%. So the bottom line is simple, okay? The pain was real, okay? There's no doubt about it. There was a lot of hurt there, but it was for selling on the index weighting, not on earnings. And that's exactly, in my opinion, the setup that an active trader wants to find and what they've been waiting for. All right, so let me give you my story on how I tie all of this stuff together, how it hits back home here in America, how it hits our books, how it hits our accounts and stuff like that, okay? I want to say that because you're probably not buying in the KOSPI listed shares directly, right? But of course, what matters is that the same memory chips, the trading, they all live here in the United States markets, okay? So if you take a look at these four pieces here, four points I've got here. The first one, U.S. chips hit, okay? On Friday, before Korea crash, MICRON fell 13.25% in one day, okay? NVIDIA fell about 6% and Broadcom about 8%. The Philadelphia Semiconductor Index had its worst day since March of 2020. Okay, what does that mean, right? If you think about it, when we start getting hit hard over here, everything starts going down in red over here in America, that chain reaction is going to follow through. And so that's probably what ended up triggering and lighting that fuse in Seoul, okay? Now, if you take a look at number 2, the ETF exposures, okay? The iShares Korea ETF, ticker EWY, gives you direct exposure to Samsung and SK Hynix. SOX, SOXX, and SMH, they both carry heavy NVIDIA, Micron, and Broadcom weight. And if you hold S&P 500 or the QQQ, you already have chip exposure baked in as well, okay? So this ain't just a Korea problem. I mean, it's in your portfolio as well, okay? Take a look at number 3, the watch list. The won was at 1560 per dollar. I mean, that's the cross asset signal, okay? KOSPI 7500 is the support level traders are watching. Watch for U.S. CPI inflation this week. Broadcom guidance updates coming up, and anything that has to do with the HBM4 ramp news, okay? Keep an eye out on those things. Now, number 4, okay, we've got the trade. Goldman Sachs calls Korea its highest conviction equity market in Asia. Okay, that's the Goldman Goldman Sachs stamp of approval, right? The KOSPI trades at just 7 times forward earnings. That's super cheap for a market that's growing earnings 300% this year. Okay, that's my opinion, at least. 7 times forward earnings, growing earnings 300% this year. Okay, but don't just buy the first bounce. Okay, in my opinion, wait for chips, futures, and the won to stabilize together. That's the real signal. And then finally, I want you to read across that blue bar that I left right there for you all. Okay, the memory super cycle. Okay, it's safe, it's intact, sold out for the AI run right now, at least for the foreseeable future. Okay, this is forced selling. It's not a broken thesis, in my opinion. Stay sharp and scale in when you can. Okay, Charlie Munger would say, hey, don't avoid. Charlie Munger would say, avoid stupidity. Okay, the market rewards discipline, not the clever. And that is my takeaway for today. Okay, again, my name's Curtis. Thank you for joining me and watching all the way throughout. If you can, please give me a thumbs up. Click on that thumbs up button for me. Give me a subscribe. Drop in a comment. Tell me what your thoughts are on memory stocks, on the Korean stock exchanges, right? On AI trades, anything, okay? If you've got a question, drop it into the comments. I'll try my best to respond back. Thank you for watching. Make it a great day.